All right, folks, we're going to bring in our guests right away. We have David Bahnsen here. What's David Bahnsen's book? I'm just skipping through the text. Let's go right to it. David Bahnsen, managing partner of the Bahnsen Group, the author of Full-Time Work and the Meaning of Life. Well, Arthur's book is Taxes Have Consequences. Is that right? I know it by heart now. Art Laffer.
You got it. You got it.
My dearest friend and the most brilliant Art Laffer, who should have had a Nobel Prize 30 years ago. David, you're here. Stock market going down. Jerry Willis made I thought, some very interesting connections. Mm-hmm. I don't know that this is about the economy. It may be about fears in the Middle East. What do you think?
Well, what's interesting is that bond yields came down and the stock markets are down. And so we've had a total correlation with stocks and bonds, where bond yields have been going higher on the day stocks drop. Today was a little bit of the opposite. Oil was up, but not that much. I mean, you're still around 86, 87, but it was up, and it's been up. It had been at 75. It's now over 85. I think that there is permanent instability in the Middle East, but it's heightened, and I don't think markets know what to make of it. But I just want to remind people, markets went up the week after that horrific Hamas attack. So markets have never really known how to price Middle Eastern instability.
All right, don't know how to price Middle Eastern instability. Art Laffer, story today, front page of the Wall Street Journal by Greg Ip, who's a good reporter. Okay, we know Greg Ip many years. What's wrong with the economy? And he blames people. It's you, not the data. He's saying the problem here, Joe Biden should have much higher approval ratings because the economy is really very good. And the people out there who keep polling that the economy is not good, they're just dumb little bumblebees, and we shouldn't listen to them. Who's right and who's wrong here?
I think the article's wrong in saying it's the people that are at fault, not the economy. You know, when you look at it, prices are rising. They're not rising as fast as they were, but we're up something like 18, 19% since Biden came into office. If you look at employment to population, the participation rate, that's at a very, very low level. Even though it may be rising a little bit now, it's really not doing well. This is a workerless economy, to be honest with you. Unemployment rate low, but the employment rate is also very low. Interest rates are high, 4.5%, 4.3%. But the one I like to look at most of all, Larry, that really shocks me is the gold price and the cryptocurrency, Bitcoin price. You know, the dollar is falling very, very sharply relative to gold. It's up to 2,300 plus, Larry. That's really very high. And if you look at crypto, of course, the crypto prices are all-time highs, which tell you the dollar is at all-time lows. Now, we are strong relative to other currencies, but that just means that we're the tallest midget in the crowd, as they say. And,
well, it's interesting.
You know, it's just not a good economy, and I'm worried.
It's interesting on your price level indicators, which we all used to use in the days of Wayne Angel and Manley Johnson, and I still are quite useful.
Yes.
The CRB index is way up. It's up, I don't know how much, 25% from last fall.
Exactly.
As well, along with the gold move. David Bahnsen, again, with the Greg Ip article, and Greg Ip's a smart guy. I'm not here to chase after him, but he's just saying, you know, the economy is really strong, and the people who keep polling in these surveys are actually incorrect. I would raise another point. Borrowing costs are very high. It's not in the CPI. Used to be in the CPI. Mortgage rates over 7%. If you buy a new car, I think you're going to have to pay about 8 or 9%. If you buy a used car, you're going to pay about 12%. And credit card rates can be 25% plus. I think that has something to do with the pessimism among people who are up to their eyeballs in debt. But what do you think?
Well, let me give the most objective answer I can that obviously is not meant to be partisan at all. The problem for people who expected this to happen last year, we'd have a big recession, is no one's paying those higher borrowing costs because no one's buying a new home. Volumes collapse. No one wants to sell, get rid of their lower mortgage. You know what the average rate is people are paying on their mortgage in America? It's still about 3%. It's a new mortgage is 7%, but most people are paying 3%. And a lot of companies didn't need to go to the bond market at expensive borrowing cost because they'd already borrowed back when rates were lower. I think the Fed knows all this stuff is coming. There's a cliff out there for borrowing costs. So far, they've gotten away with it, but there's an expiration date on that.
All right, expiration date. Arthur, Jay Powell's back in the news. Everyone's, speculating about the Fed. But listen, I'll take Greg Ip's article because I think the data, the GDP-related data, has been much stronger than many people expected, including me. I've said this several times. And the slowdown that Bahnsen talked about really never happened, okay? Prices are still rising. Labor markets are strong. In other words, I don't think, Art, there's any reason, any non-political reason, for the Fed to cut interest rates. And if they do, I think they will be accused of juicing the economy to promote Joe Biden's reelection, in which case all bloody hell's going to break out against the Fed. All right, what do you think about this situation? I just got a minute for you.
Yeah, well, I don't think you're right about the economy being strong. If you look at it from Trump trend, we're way below where we would have been had there been no pandemic. And, you know, if you look at some of the other things in employment, it's not great, Larry. But I do think you're completely correct on interest rates. Given their model of the world, there's no reason on earth why they would lower interest rates. 2% is way too high a target, honestly. Price of gold is way up, and the price of Bitcoin's way up. Inflation is not licked by any way, shape, or form. And you've got energy prices now rising, which will bleed into the spot commodity prices, will bleed into CPI and PPI. No, I think you're right. They shouldn't lower interest rates given what they believe about the economy.
All right. I got to leave it there. We're all backed up. Art Laffer, thank you very much. David Bahnsen, we appreciate it.